Thank you for joining us. Today we're going to do a super quick video here just touching on the highlights of the jumbo mortgage for homebuyers in the DC area. If you have questions, please call us or visit the website at jumbomortgagesource.com 7 days a week. First, of course, we always want to start and define exactly what is a jumbo mortgage. It can be different depending on the location. Jumbo mortgage, of course, is any loan that exceeds the conforming loan limit per the county. And really, everywhere around DC and Fairfax and Arlington County, those are considered high cost counties. Therefore, they do have the maximum conforming loan limit for a one unit property that is at $1,089,300. Most of the other counties through Virginia and Maryland, they're going to be limited to 726, 200. That is really where most of the country lies, again, except select high cost counties that are in, again, around DC, many of them through California, through the Northeast. So again, any loan that goes over that amount would be defined as a jumbo loan. Just touching on some of the highlights real quick, there is financing available, up to 95% financing for eligible home buyers. Loan limits, it can vary and range from $1.5 to $2 million for the 95% program. We'll highlight that in the next slide. There is piggyback combo loan options like an 80-15 combo loan option for those putting down 5%, or an 80-10-10 combo option for those putting down 10%. There is no mortgage insurance or PMI with the combo options. That's the big advantage with these programs when you, again, do one of the piggyback combo loans and you're under 80 or over 80% loan to value when you're financing 90 or 95%. Of course, you do not want to pay mortgage insurance that is customarily required for anything over 80% loan to value. So again, breaking those loans up and maintaining the first mortgage at 80% loan to value definitely helps circumvent that, so the home buyer doesn't have to pay mortgage insurance. And then oftentimes they can even take advantage of the lower conventional loan rates as long as their first mortgage does remain at or below the conforming loan limit for their county. Just touching quickly on some highlights for the 5% down. Again, loan limits up to $2 million. The areas around DC, of course, are high cost areas, so they will be generally on the upper end of that. Credit scores, generally over 680 to 700 credit score is going to be required for the 95% financing. Loans that exceed $1 million, they may require a little bit, 1.5 million, they may require a slightly little bit higher score. Documentation requirements, much the same as any other loan. Complete income and asset documentation, previous 2 years of W-2s and tax returns. Just, of course, tax returns for those that are self-employed. The property types will include the primary residences, single-family homes, townhomes, eligible condominiums. Investment properties, they are permitted, but they require a much greater down payment of at least 20%. And construction to permanent financing, true construction to permanent financing, that is available starting with a 10% down option. Transaction types include purchase and just regular rate and term refinances. Cash out refinances are available, not up to 95% though. Those are generally limited to 85 to 90% financing for cash out refinances. And then again, for the available terms, all the common adjustable rate and fixed rate options, 5-year, 7-year, 10-year ARMs, of course, and your regular 30 and 15-year fixed rate, fully amortized loans are available. And again, combo loan options, piggyback loans, are commonly utilized in order to circumvent the mortgage insurance or PMI payments. For the 10% down, loan limits 2.5 to 3 million on the loan limits, and buyers, the credit scores, The credit score requirements generally relax a little bit with the higher down payment. Obviously, a greater down payment is going to be less risk to the lender, so they do oftentimes reduce the credit score requirements. So folks with lower credit scores can often be approved with a 10% or 15% down payment. Documentation, again, complete income and asset documentation with tax returns and W-2s. There is for self-employed buyers, though, that do have 10% down. There is a bank statement qualifying program, which we're going to touch on here in just a second. Property types for this program, again, all the same. Primary residences, townhomes, select condominiums, second homes and vacation homes. Those do start at 90% financing. So those, again, are an option as well. Transaction types, again, purchase, rate and term, and cash out refinances, and all the available terms, the common terms are available. Again, combo 80-10 loan options are often utilized there. Documentation and reserve requirements. Reserves, of course, are the savings, liquid or non-liquid assets that a home buyer has remaining after they make their down payment and their closing cost. Generally, all programs, when you're talking especially about jumbo loans, they do require some form of reserves. So if a home buyer's mortgage payment with their taxes and their homeowner's insurance and everything included, let's say it's $5,000 a month, the program may require 3 months of reserves. Again, after down payment and closing costs. So in that case, if their payment was $5,000, they would need to have $15,000 to show in a liquid or non-liquid account. That's the good thing. It doesn't have to be liquid. It can be a retirement account, 401k, or an IRA account. Just documenting that would be sufficient just to satisfy the reserve requirements. And that reserve requirement does change depending on, again, the loan to value, the final loan amount. Higher loan amounts, once you get it, you get beyond $2.5–3 million, those could require 9 months or 12 months of reserves in some cases. 3 months of liquid asset statements generally is the standard to document your down payment and your closing costs. And then again, retirement statements, things of like 401k and IRAs often are just used to show reserve requirements, and that's generally a quarterly statement, so they would only be after really the most recent statement for that. Expanded programs include the bank statement program. This is helpful for home buyers that are self-employed. A lot of times they may have trouble with tax returns and documenting and formulating their qualifying income. So the bank statement program allows eligible home buyers, self-employed buyers, to finance up to 90% loan to value. And basically you qualify based on either a 12-month or 24-month history of your actual bank deposits. So that is a way, really a helpful way for a lot of especially self-employed buyers to be able to qualify based on their actual bank deposits. And you can read more about that on the website and all the parameters. Again, second homes and vacation homes up to 90%, and real true construction or permanent financing options do start at 90% as well. Home buyers that have questions, again, are encouraged to reach out to us 7 days a week by calling the number or just visiting jumbomortgagesource.com. Thank you.